Hey everyone, and welcome to another FogCutter Live. I'm Mike Curtis here with Preston James, and we are here to help guide you through the fog, all the noise that comes your way as a trader and investor. So, Preston, welcome. We got another fun one on tap here.
Yeah, I love getting together to start the week. There's nothing better. Nothing
Yeah,
better.
there's never a shortage of things to talk about.
No.
So we'll talk about some of the recent news, what we're seeing today in the markets, peel back some of what's on tap for this week, some of the big companies that are announcing earnings that we're keeping an eye on. And then we wanted to spend some of today talking about how we're trading right now in the market conditions that we've been facing these last couple of weeks. So I think we got some good stuff for you. So Preston, it wouldn't be a Monday morning if we didn't have some tariff news
Right.
on the radar here. So
No,
more
it's
news about back and forth with the US and China, back and forth on the steel tariffs. And my takeaway from this, and I obviously want to hear your thoughts, is I think the market's getting a little numb to all the tariff news and back and forth. The overnight moves really react quite the same. What's your 2 cents on that?
yeah, I agree with that. Look, the equity markets, it's a fancy way of saying stocks, the collection of stocks, the stock market, they're looking forward and trading today what they perceive um, the immediate future is 6 to 9 months, let's call that. And then backing off from that, we really lean on the cycle that the market goes through. And we're recently through with the yearly market correction that we average. So whatever is happening, and it's confusing to everyone, I have to sit here and think the basically the two most consequential financial powers in the world are trying to come to an agreement on something involving something probably more important than anything, money and economics. It's not going to happen by next Tuesday.
Right.
And I think the market is anticipating that too, having gone through. It went through what's that clown, the Pennywise, the It movies. I mean, the market went through the It scare with the clown in the gutter. I mean, the goosebumps were raised everywhere. We're through with that, like you said, but it is tariff, tariff, tariff all the time. And I thought about this before we started, Mike. The market, how we've seen the last, oh, it's up, it's down. This is what the market does the majority of the time.
Totally.
It's just kind of hang out and react and respond and go up and go down. And we kind of have a perfect strategy for that.
Yeah, and we're going to talk about that in just a second. But just yeah, obviously as these reciprocal tariffs were announced beginning of April, what the market hates is indecision, right? It hates uncertainty, and so when some of that was announced, right, it just fueled the massive sell off, and we've really recovered all of that ground at this point. The market hated that uncertainty. And now, even though we're still having the tariff headlines and the back and forth, so I think you said that really well, Preston. This stuff doesn't get figured out in a day or two, but we've started to see a few of these deals kind of come together, a few of the details, and really, I think the market started to digest that these things are going to come together. It's going to get finalized. And we started to get a glimpse of what some of the details of these might look like. And it's not as drastic of a change as some of that initial concern was, I think, leading to that selling in the market, right?
Totally. I think the market was dealt with a huge pile of uncertainty. And then that is piece by piece, country by country, becoming clearer.
Right.
Um,
And so maybe we could throw a chart of the just the S&P 500 up for a second, but right, what we saw is throughout, March, the market dipped, and then the reciprocal tariffs hit beginning of April, and we just went through that really sharp correction. And then as some of that started to get worked out, right, there was that huge rally day that we saw on April 9th when, hey, we're going to pause these, we're going to get it figured out, right? And the S&P and the Nasdaq just saw like the record setting recovery, and the market just has really covered a lot of ground. And so when we snap back, the S&P was below 5,000, and to its peak, 2 weeks ago, it almost hit 6,000. So we recovered, right, 20% almost in a pretty short period of time. So what's typical after that type of move is the market needs to catch its breath. It sprinted for almost a month straight, higher, higher, higher. And now what we're seeing, I was just looking the last 10 trading days, 9 of those 10, we've just kind of been flat or down a little bit. And the market's catching its breath, right? So we cover all this ground, really recouped most of the losses on that tariff craziness. And now, right, the bulls have covered a lot of ground. It's just like the sprinter that needs to catch it, his or her breath. It's just we've covered all that ground, and so it's not uncommon to see a little pullback, to see some consolidation, which is really what we've been going through these last 2 weeks.
Yeah, right? And that too, Mike, and the bulk of earnings have been announced and digested. We've gone through an earnings season in there.
Totally. And a telltale sign of this, if you're new to trading, most people know what a moving average is, right? So we put moving averages on our charts. Typically, we have like a 50-day moving average, a 100-day moving average, a 200-day moving average. And when you really get stretched, especially that 50-day moving average, which is gauging a little shorter window of time, the market really ran away from that 50-day moving average. It ran away from it to the downside, and then we ran away from it as we recovered to the upside. So as you see it getting really stretched, a lot of time that can be a telltale sign that market just might need to catch its breath a little bit. We might see some consolidation. We might see a little bit of a pullback. So Preston, here's the question of the week for you. How do we love trading through times like these? Like what's your go-to kind of bread and butter strategy as we're trading through a little bit of the choppy indecision periods like we've seen these last 2 weeks?
I mean, I'm going to say it. I mean, it just has to be the money press. It's a way, we've talked about this before, but you didn't create it and I didn't create it. But what it takes advantage of is there's this huge interest. I don't know if it's because when you watch sports, every other ad is a sports gambling ad. I don't see any ads for options, by the way. But if something's in the soup, for some reason, the world has gotten in a big, huge hurry about where Netflix is going to be trading next Friday, and where Tesla is going to be trading next Friday, and where John Deere is going to be traded. We don't know why. And what happens is it ends up, because of that interest, there's a huge abnormal option pricing on these big name companies week to week to week. And what the money press takes advantage of, just to try to explain it to the layperson, is we're not gambling either, jumping in, oh, where do we think Netflix is going? No. We sit there and collect, just like the Vegas, and I think all those casinos have been created over time because of the visitors putting something on the wheel or doing the betting. The odds are in their favor enough to where they know they can plan the next casino and pretty much have it built, and they know where the money's coming from.
Right.
So we get to be in that role. We're collecting that speculation. And so if things are popping around and batting around, and I'm probably about 70% right now of my portfolios across the board are in money presses. Just to put some numbers to it.
Yeah,
to take advantage of this reality.
That's powerful. And before we talk a little more about the money press, just as you brought up the portfolio, at this point, seeing that recovery from that correction, are you pretty much fully invested? Do you have most of your account working at the moment in these conditions?
That's a great question. Most of it, yes. Still have some dry powder because the environment now is ideal for when we see the certain setups that we do to have some money ready to take advantage.
Perfect.
Yeah.
Yeah.
Back to that. Catch it at the very bottom. I want the environment better, and now we have what we.
Absolutely. So just back to the money press, we're collecting that premium by being a put seller. And what we love about this and why it's so powerful in a lot of different market conditions is when you sell a put, you can actually make money if the stock doesn't move. If it
Yes.
goes sideways, you can still make a max profit. So in a week like last week, right, we had a strong Monday and then we really didn't do a whole lot. It was down, it was up, it was down. We kind of chopped along. And so where a lot of our money press trades ended up making some money last week, right? Not every week's going to be perfect because you can make money if it's slightly down, you can make money if it goes sideways or up a little bit. That's kind of the sweet spot of the money press. Where the week before some of those trades experienced the losses, the market pulled back for a few days. So, but when we're going through this indecision, being a put seller really kind of stacks those odds in your favor, because I compare it to just your traditional investing, right? You buy a stock, if you buy it at 100, 2 weeks later, it's still trading at 100. You haven't made anything. Your money's been tied up, your capital's been tied up, and you're just really at break even. Where in the case of a money press, you can see a nice profit when the stock's gone from 100 to 100.
Yeah. Your
We can
cash flow.
generate an income by being a put seller.
And the story of many a stock, if you want to go out for the year, it was at 100, it's at 115, it's at 90. And you get the end of the year and you're right near 115 again. I mean, that's frustrating. And I'm not knocking buy and hold. Buy and hold, I think, has a whole place. I mean, buying and holding Apple, you're doing really well over the last 20 years. But as you go along, a lot of these years, and a stock is about the same ending the years when it started. Now, how would you like to cash flow on that? And there's 52 opportunities to do that with 52 weeks in the year.
Yeah, it's pretty powerful. So we love it. If you've never heard about the money press or you're wanting to get started, we've got a free book, a guidebook that kind of breaks down the strategy. You go to moneypressmethod.com if you want to get a free copy. Just cover the shipping. We'll send one to you. You can get instant access to the electronic version if you want to start studying. It's a powerful, powerful strategy. Really been the bread and butter for Preston and myself for over a decade now.
Yeah.
So
I'm on a mission to get that as many people's hands as possible, because the other dynamic is this 80-20 reality that we're in. What is that? 80% of the volume you see is done by these institutional hands. They can't do the money press. They won't do the money press. They have billions of dollars to push around. But so all to say that no matter how many of us learn this, us 20%, we're always going to be probably becoming less and less over time. So it doesn't matter how many of us do it. We just not been on a mission to get this in as many investors' hands as possible, because it is that powerful.
Yeah, definitely go check it out. It's a really fun strategy. A little unique, right? Preston's built this. When was it, Pete? 2012?
2010.
2010, that's right. So we've been at this for a while. We've fine-tuned and tweaked and back-tested this thing. We've got it to where we've got a pretty good rhythm for it. And just like any strategy, it's not 100%. It's not going to be perfect, but we can really stack the odds in our favor. So, and again, the market conditions that we're in right now, it can be a real sweet spot. So, P, maybe let's get everyone ready for the rest of this week.
Yeah.
We've got some manufacturing, some PMI data coming out. Friday is the monthly non-farm payrolls report. The unemployment report is always the first Friday of the month. So that has the tendency to bring some volatility once in a while to the markets. But kind of a lighter week on the economic calendar front. But I know you've got your eye on a few of some big companies reporting earnings this week.
Tuesday after the close this week, CrowdStrike, the same CrowdStrike that we thought the world was ending on last summer. Strong player in the cybersecurity world. Tuesday after the close, big deal, CRWD. And look at CrowdStrike, going through that correction and already tagging recent 52-week highs. This is before earnings. That's when you see activity like that, we never know what's going to happen over the earnings. We don't know what they're going to announce. No one does. Well, some insiders do, but no one really does. And most importantly, we don't know what a company like this is going to say for future guidance. Future guidance, that's key. So there's multiple things announced in an earnings announcement. But if we just look at this, that it's comfortably, not only did it take out a 52-week high, but if you see going back about a week, it gapped up. This is a week before earnings. It felt the way of gapping up to new highs. I mean, you just have to tip your cap and say, wow, CRW do. Very interested to see what the crowd reaction is. Crowd reaction to crowd strike. Wednesday after the close, MongoDB, MDB. This is a real player that, it's in a different way right now, but a real player in just the whole world of. Kyle could probably tune in and say it better than me, but I'm very interested in what the crowd reaction is here. Maybe my biggest holding across multiple accounts, not MDB, this next one I'm going to say, and very interesting because of NVIDIA last week announcing earnings, which is the grand poobah. But I would dare say this is number 2 in the whole AI rollout. I'm talking about none other. Here I'm like, oh, the earnings are over. Number 1 just announced last week, and number 2 is Broadcom, AVGO. It comes in Thursday after the close. Mike, look at this race higher. It's literally like pennies off of the high it set back last December. Here it comes for earnings after the close on Thursday. This one's it's a rock solid dividend payer. Again, I'm very interested, and it's up $6 just today. On, I think the Nasdaq's up some and the Dow's down some today. Very strong to start the week.
Mm-hmm.
I've got all eyes peeled on that. Also, I think this is interesting. Ulta announced just last Thursday after the close.
Right. Really strong
And
reaction.
Ulta, I mean, this is a year chart right here. I mean, this is a 52-week highs, gapped higher. This is them putting a stamp on that women in beauty are undefeated in world history. Undefeated. Now, this one is shaping up and setting up to be money pressable. But this is such a drastic move. Sometimes we want to wait a few days. I have my eyes all over Ulta. But I bring up Ulta to say that Lulu, this coming week, Thursday after the close as well, announces earnings. They've been in their own market correction, took them down. They've been in their own misery. But just recently, they've had a gap up day. And they've tended not to trend exactly like Ulta, but I wouldn't be surprised with Ulta's performance there if Lulu doesn't have a great. We'll have to see how the crowd responds. That's the biggest deal. How does the crowd respond? Thursday after the close for Lulu, very interesting. And just closer to home, Vail Mountain Resorts, which says MTN. I don't believe they have weeklies. I could be wrong on that. But that big gap up news that we saw last week is the former CEO returning to the helm. And there's been some sell off right here, but I just thought this was interesting. Earnings this week, Thursday after the close.
Nice. And usually you're not jumping into a position right before the earnings announcement, right?
Right.
You want to see how the crowd, the institutional money reacts to that earnings report.
Exactly.
And then we size it up. We love to trade it right after the earnings, right? But not before. But in the case of a Broadcom, right? It's something you've held. I know you've owned shares of that. You've been an investor in that for a while. How do you, just to get into the weeds just a little bit, how do you typically handle a position like that going in to earnings? Are you buying some put protection? Do you like to pay for that put protection by selling some calls against your stock? What's do you have kind of a go-to?
It's a great question. For a lot of my Broadcom holdings, it's just such a long-term focus. And I just figure if you're going to have something for if you're going to own Apple for 10 years, you're looking at 40 earnings announcements, So, I mean, it's just a part of the deal. But if I have something, Mike, that's a little more of an intermediate trade, maybe like a 6-month trade, 2 earnings announcements can really adjust that flavor of a trade. So what I like to do, especially if I've had some gains going into the earnings, my number one favorite thing, and we could spend a whole session on this,
Right.
is to do what's called a collar. And I've received so much feedback on this. I didn't invent it, but for some reason over the years, people that have crossed our path that have picked up what they have, I've gotten so much feedback on this. Like, I never know you could do this, but so let me just explain what it is in a nutshell. Let's say you've had a stock and you've appreciated a $30 profit on it. Maybe that might mean a 15% gain or a 20% gain. Maybe you have call options and you're up 100% because of the leverage, but you have something, but it's still on paper. Right? It's still on paper. You come up to an unknown like earnings. Well, do you just ride through it? It kind of feels like, do I cash this in first? Well, if it has such momentum, maybe earnings it's going to send it on even more momentum. What do you do? Well, introduce this collar. And basically the nuts and bolts of a collar. Let's say you've gotten to something and you've ridden it from 70 to 100. Just to make 100 a nice round number. You could do 2 trades on it. That's just what it comprises a collar. You could sell a call, and let's say that's $5 above 100. So you sell the 105 call, and at the same time, you buy the 95 put. So you sell a call and buy a put, and guess what? If you happen to space it exactly equal, so if it was 100, if you sell the 105 call and then space the put, buy the 95 put, both of those, we don't know how it works, but it's the same math. They're about the same premium. So guess what? You get to put on a collar and it doesn't cost you a penny. It doesn't cost you a penny. And I'm talking to the audience because Mike knows this through and through and through. But it doesn't cost you a penny out of pocket. And what's happened is if the worst case scenario comes out and the thing goes down from 100 and it's the worst news ever and it turns into a $20 stock, well, that put kicks in and you can get out at 95, which means you can grab most of your gains.
Yep.
And it didn't cost you a penny. Anyway,
it's like a free
collar is awesome.
Policy. Yeah, free insurance policy. So, yeah, that's why, Preston and I, we've been screaming about this for years and years. If you're an investor, if you're a trader, you have to understand how to use options in your investing strategy.
You can't trade without options today. Hell no.
It's like buying a car without insurance, buying a home without insurance. You just wouldn't do it. Most people, they drive the new car off the lot. The first thing in their brain is, I got to talk to my insurance agent, get the policy on this thing.
It's mandated by law.
Yeah, exactly.
The laws of the land say you have to buy insurance.
Yeah.
You have to buy an option on your car.
Right. In 100 shares of Broadcom is, right, how much right now, Preston? I mean, you're going to buy a $40,000, $50,000 car. You're going to get insurance on it immediately. It's
$250. It's $250. It's up 8 right now.
So it blows our mind that people will spend that type of money on a stock and not insure it with a put option. So we have a lot of fun trading that way, and it really can put your mind at ease because earnings, anything can happen. That stock could gap down. And so if it is a longer term investment, having that peace of mind going into an earnings announcement, it just changes it. Instead of worrying about the after hours quote, oh no, did it gap down? Did they not like the forecast? Is the CEO mumbling a little bit on the call? You just don't care about any of that. You've got your downside fixed. You got the free insurance. So it's just a fun way. If you've never heard of that caller before, in our Trader's Edge world, we have different videos, training videos that can help teach you some more about that, more about options trading, so you can be a little more savvy investor that way, or just go do some research on your own. You can find some more info on it. But
Mike, to sum up everything you were saying about that, the word control just rose up to the top. I mean, to feel like you're in control with anything. That's why when the teenagers come, there's no control, but I mean, control, if you can have control with your investing, some degree of control, wow, sign me up.
Yeah, definitely.
Yeah.
Well, we're kind of at time, P. Any other kind of parting shots or words of wisdom for the folks before we sign this one off? And
Well, just try not to feel overwhelmed. I mean, there's a lot of concepts that can hit you fast and furious. It doesn't have to be that way. Just take it slow. Yeah. Try to enjoy the journey as much as possible. I know there's a lot of new terms and we get excited about it, but that's what we do. We talk about it all day long. I mean, if you break away from what you're passionate about, you're like, oh, the investing thing. I mean, that might be a part of your day. It's all of our day.
Right.
So it's clear to us, we want to think, but it can seem overwhelming. But I would just say pace it, and just pace it a little bit.
I think that's powerful insight. I compare it to, you go get a little workout in, or you go for a walk, or you're making a little bit of progress, but it feels good. You kind of enjoy the process, right? Get a protein shake after, you're feeling healthy, you're feeling good, right? And it's baby steps. You're not going to see some huge transformation. Learning options trading or just learning investing in the beginning, it's a lot of that same way. But if you sit back, you try to enjoy the process, it's just a ton of fun. Don't get too caught up in all that there is to learn or know. Just enjoy the baby steps, enjoy the process. You'll come out on the tail end of it. Maybe that's a few months or a year. Just so glad you put that time and effort in. I think that's most people, right? You work out for a stretch, you feel great. You don't regret that time spent at all.
Absolutely.
Anyway, we'll leave the folks with that. Anything else, P?
No, I think that's great for this one, Mike. Thanks so much for.
Hey, yeah. Until next week, take care, everyone.
Take care, everyone.